Hello everyone, in today's video we're going to introduce one index ETF and one stock. The ETF we're covering is SOXS and the stock is Nvidia. Let's go through them one by one. First, let's talk about the ETF. There's a big opportunity at this level, so I want to highlight it directly. We're talking about the semiconductor sector. What's the full name of this ETF? It's a 3 times Bear Semiconductor Index ETF. In other words, it's a triple leverage inverse ETF tracking semiconductors. And what's the underlying asset? It's based on the Nasdaq index, specifically all the semiconductor heavyweights included in that index. So, what stocks are in its underlying basket? It includes Nvidia, Taiwan Semiconductor TSMC, Micron MU, Broadcom AVAGO, and so on. These are all top quality semiconductor stocks. Compared to something like NVDL, compared to NVDL or TSLL, SOXS is fundamentally different. So what's the key difference? TSL, for example, only has one stock as its underlying asset. Like TSLL, its only underlying holding is Tesla. And for NVDL, the only underlying asset is Nvidia. But SOXS is completely different. Its underlying assets are a diversified basket of stocks. So how many stocks are in this basket? About 30. SOXS tracks around 30 companies. Those are its underlying holdings. Roughly 30 companies like the ones we mentioned. So compared to just one company, what's the advantage here? Let's take Tesla as an example. For instance, Tesla, just look at what happened last Thursday. Out of nowhere, a headline broke. Elon Musk was publicly clashing with President Trump. They got into an argument online, started a public feud on the internet, and that instantly triggered a sell-off in Tesla. The stock plunged that day, at one point dropping over 17%. And its put options, some of them jumped 70 times in one day, others went up 80 times, even 90 times. Some surged over 100 times. Yes, really. Those put options jumped 70 to 100 times in value. Think about how extreme that is. Just imagine what kind of market condition that was. That's what we call extreme volatility. For an individual stock, that's a textbook case of extreme movement. So has Nvidia ever had extreme volatility? Yes, it has. There have been similar situations. Absolutely. There have been cases. Look back at this point in history. See this chart right here? What happened was China launched an AI platform called DeepSeek, a new AI software, and it triggered a huge sell-off in Nvidia at that day. Let's open the chart. The stock plunged 33% in a single day. That's a massive drop. 33%. That's intense volatility. In contrast, SOXS is much more stable. Unless there's a tariff war or some other major risks, like a black swan event impacting the entire market, then yes, it could react. But under normal conditions, especially now that the tariff war has just recently passed, as long as we don't see events like what hit Nvidia or Tesla, stock-specific isolated risks, if we avoid those, then SOXS tends to move steadily. It behaves like a more stable index ETF. SOXS generally trends in a more controlled fashion. Why is that? Because it holds 30 stocks, and with those 30, they help each other balance risk. It acts as a built-in diversified hedge. So what does risk hedging mean? For example, let's say today Nvidia. Let's take Nvidia today as an example. Its H20 chip just got hit with US export restrictions. That's clearly negative news for the stock. And in terms of market reaction, what should the price do? It should go down. But at the same time, maybe TSMC makes a breakthrough in some new nanometer, a new chip manufacturing process that could push its share price up. And when that happens, TSMC stock rises. Now, inside this basket of semiconductor stocks, those two effects, rise and fall, can offset each other. And the result? The overall index remains relatively stable. That's why SOXS stays steady. Now let's get into how I view this ETF at the moment. Right now, around this price level, I'd say anything under 11 is a good entry point. Our target is for it to rise to 20. How long will it take to hit that 20? Roughly by the end of July. End of July is the timeline. At the end of July. By late July, it should reach 20 or even higher. It may go beyond 20. So at this level, I suggest keeping a close eye on it. Now, for this index, when it comes to single stocks, you usually invest no more than 20% because individual stocks are volatile, the risks are higher. But for an index ETF, you can invest more, up to 80%. Even an 80% position is fine for index ETFs. It's not a big problem to allocate that much. With ETFs, it's generally safe. And why is that? Because it's more stable with smoother movement. That's something I wanted to highlight. Next, there are several star stocks in semiconductors, so I want to highlight especially one in particular, that's Nvidia. Globally in semiconductors, everyone watches Nvidia's lead. So, second point, let's talk about Nvidia in more detail. There are a few key things to know. First off, to be honest, lately all the news around Nvidia has been bearish. That's why ASO Access is bullish since it's an inverse ETF. So why is it bearish? Here are a few reasons. First of all, the first point, the H20 chip is now restricted for export. This directly impacted Nvidia's Q2 revenue, causing a loss of $5 billion. Yes, $5 billion gone in Q2. And in the second half of the year, this will further hit Nvidia's performance. It's expected to weigh on earnings. Analysts are projecting a total drop in revenue of about overall an estimated $8 to $12 billion. $8 to $12 billion. Do the math. Factor in Nvidia's profit margin. This will hit their earnings hard. It's not a small impact. Even though they quickly launched a downgraded chip just to export to China. Yes, a restricted version for China. Still for export, but it's priced between $6,500 and $8,000. Even so, it can offset the lost revenue from H20. That export ban caused major damage. The recovery from it is very limited. So at this point, everyone needs to be cautious about the risk. Be aware of downside risk. Second point is the rising geopolitical tension, especially between China and the US. As tensions escalate between the two countries, Nvidia may face long-term headwinds. What kind of trend? A slow decline and sideways move, gradual drop, sideways trading, that kind of pattern. And where will it stabilize? Likely between $80 and $90. Somewhere in that range. Yeah. Is there a chance for improvement? Yes, definitely. First, quickly rebuild ties with the EU. That means the US needs to improve its relationship with Europe and boost the exports to that region. This part is under discussion and worth close attention. Another positive sign is repairing ties with Saudi Arabia and other countries in that region. To expand exports there, some progress has already been made. Part of it is done, but overall, right now, we can see that region is not a manufacturing hub like others, so demand is limited. Ultimately, what matters most is China. It still all comes down to China. Last year, China accounted for nearly half of Nvidia's total revenue, roughly 47%. If they can reclaim that market and only rely on smaller deals, it won't fix the root problem. Minor patches won't solve the bigger issue. This is the biggest risk right now, and that's a key issue here. That's it for today's video. The main takeaway is simple. Buy SOXS boldly if it's under $11. Aggressively add to your ETF position. Load up under $11. Target is $20 by the end of July. If you liked this video, please subscribe and hit the like button. Thank you.